This is Pat Walker at Mission Winners, and guess what we're doing? I think I opened up Pandora's box. I asked what questions do you have? I'm just teasing. I asked the team, you, what are questions you have? You know, I mean, folks, I remember how frustrating this can be. Like, what the heck am I doing here? And trying to figure stuff out. And I think that's part of the reason why you hired me, is to speed that up. And I don't take that lightly. I will tell you this. I speak at various venues on different things, but this to me is a powerful statement and a powerful thought. To know that 2 + 2 = 4 is knowledge, but to know why 2 + 2 = 4 is knowledge that's transferable to other situations. And in respect to that, that's why I take your questions so seriously. So here's what we're going to do. I got questions here. We're going to answer them. I don't know how long this video will probably be 6 hours long. Just kidding. No, we'll do a couple of videos through time and answer your question. April asking the question. So April asked, how much of my portfolio to have allocated? Here we go. Can some level 3? Can some level 4? They say, Bill O'Neill says, you should own between 8 to 10 stocks maximum. You only do that when the market's doing really well. Okay? When the market's not, you own less. When the market's really bad, you don't own any. And I've had stretches. I don't own any stocks. I just sit tight and wait. Back in those days too, you know what I did? Did a lot of mountain biking. Just got out and did other stuff. So don't force it. I just have to share this with you. This is very important. Don't try to make something out of nothing. Something's got to happen. Or I'm sitting here, I got to do something. No, doing nothing sometimes is the best thing that we can do. It preserves 2 types of capital, financial capital and emotional capital. And you need both of them. You need both of them to succeed through time. All right. Another good quote, only the still pool reflects the stars. And you say, man, you got them all stuck up there. Yeah, after 30 years, you get a lot of things up there. So, but not hair. So here we go. April, question. And this is for everybody. We're going to go through all these. This is the introduction. The other ones we'll go through faster. All right. But I will be thorough on all of them. You have my word on that. 8 to 10 stocks. That's in a good market. How much do you put in there? Well, if we take 10, all right, the math is simple. You've got X, your portfolio is worth X. And you can say, well, give me a number. I don't know if your portfolio is worth 50,000, 20,000, 20 million. I don't know. So, but let's just, for the sake of our example, say it's worth 100,000. All right. And we're not going to go on margin here. We're just going to do cash. And then I'll elaborate on that. You have a $100,000 portfolio and you're going to own, let's make it simple, 10 stocks. All right. If you want to do 8, just take 100 divided by 8. I'll take 100 divided by 10 for simple math. Your first purchase, and again, no day trading here, clean and simple basis. Your first purchase would be $5,000. Okay, you've got $10,000 allocated for each stock. Your first purchase is $5,000. The stock goes up and reaches a little level above, it goes up 2 to 3%. What do? You buy another, ready? You bought $5,000. Your next purchase would be $3,000. 50%, then 30%, and it continues going up. You buy 20% for a total of $10,000. Now, if you were going to do it on margin, your first purchase, and you have a $100,000 account, what would it be? Every number would be doubled. Your first purchase would be $10,000. All right. Your next purchase would be $6,000. And your next purchase would be $4,000. You see the percentages. Always remember this, and this is very, very important. We never add to a position unless it's acting good for us. And we never average down. So that's the math, and that's exactly how it works. And it works great. All righty, here we go. The next question that came up was from, and please, I hope I'm pronouncing your name properly. And if I'm not, correct me. And I also apologize. I don't want to be rude. And I mean that sincerely. Anilesh has a question here or a comment. I'm experiencing an issue where I buy the stock from Pivot with good volume, and within the next hour, the stock goes down and forces me to step out from the stock. Here's one thing we can do. to address this. And this is what I encourage. Focus on really clean and simple base formations. It does not need to be a cup and handle, but force us on clean and simple base formations. And I'm going to do something here. We're going to switch to the screen. Like Caterpillar right here. It's simple. MasterCard right here. It's simple. LPI right there. It's simple. Focus on those and you will dramatically improve your results. This is a new issue setup right here. All right. And I could show you countless other older stocks where this works. It works like a champ. If you do that, you will dramatically increase your odds and potential of making money, but dramatically decrease the potential that you're going to have a problem and have to sell. I commend you on something. You run it tight. Continue doing that and you'll be in great shape. And I hope that helps you. The next question is this, and this is from Jason. How can I be better prepared for buys and sells when I'm working the day job? Great question. Again, this is for Jason and everybody else. I'll say it again. How can I be better prepared for buys and sells while I'm working the day job? And this is the solution, and it works. You get the key list. Only look at the charts that have clean and simple base entries on the daily and weekly charts. Don't look at anything else. Some of them don't have that. Some of them are pullback setups. Find the ones that are the best of the best. And when you do, put a buy stop in on those. Okay, Jason? Put a buy stop in. But here's the important part. Also put in a contingent sell stop. And what does that mean? The buy stop means that if it hits a certain price, it gets triggered and you buy it. And I know you know that. The contingent, not a sell stop, contingent sell stop means that if the buy stop is triggered and you buy the stock, the sell stop becomes an order that protects you. And focus on the clean and simple bases. And by so doing, you will be able, putting a contingent sell stop in, to limit your losses. And it's good above the line, and it's like this. It's good above the line, and it's bad below the line. All right, here's the next question. And this is from Greg. Greg says, chart durations is something I need to get better on. Maybe you can address this in a video. You're looking at the daily chart where price is clearly below the 50-day, but the hourly is above the 50-day. Good question, Greg. Chart durations. You're looking at the daily chart where price is clearly below the 50-day, but the hourly. Overall, I will share this with you, Greg. I am always keying on stocks that are above the moving averages. Rarely am I looking at a stock below the 50-day. I really want strength. I also focus on stocks that are within 20% of 52-week highs. That is very, very important with an accumulation distribution of either A or B. So I hope that helps you, Greg. Again, foundation. It's above the 50-day. Preferably it's above the 21 EMA and it's above the rising 8 EMA. That's the best place to look for stocks. That's where winners are found. Anyway, Greg, I hope that helps you. All right. I don't know if this is a question per se, but it's a comment from one of our VIPs, Mark. And I'd like to read this to you. Lots of folks lament not having certain tech stocks when they got crushed because they bounced. But for the moment, they belong to yesterday's hot groups and are running to a lot more overhead supply than MasterCard or Laredo. And it's exactly right. A lot of people say, oh, I got to always stick with the max list. Folks, I'm going to show you something. We're going to go through this real quick. And this is in relation to a question comment for Mark. Apple, there's really nothing special here. This is a daily chart, as you can see. The green line is the 50-day, by the way. I mean, this needs to power through the 200-day, folks. Amazon. Baba, there's nothing great here. Baidu, possibly, but not great, okay? And there was some serious selling on that bar, wasn't there? And that bar right here isn't as bad, but still some selling. Facebook, I mean, look at this. This is a classic example. Lifts through here, and they take it right back down the next day. You got to be careful with that. Google still above the moving averages. There's potential. Goldman Sachs is grinding up. There's no clean entry here, but it has been grinding up. Isn't it interesting? As Mark points out, not a technology stock. Netflix, this is just, I mean, folks, This gapped up on earnings. Look at that. That was huge. And since then, it's done nothing. NVIDIA, we were selling this up here, folks, just if you remember. You can go back and look at your account. We got out of this, and it's good we did, because it fell well over 100 points from where we were selling. Square, some possibility related to financials. Tesla, okay, but it lost quite a bit here. We'll see what happens. Twitter is hanging in there. Visa, MasterCard, hanging in. That's one of the best ones. And then I'll show you Microsoft just chopping around. Anyway, we got to go where the money's treated best. And if it's going into, as Mark points out, if it's going into MasterCard, fine. If it's going into LPI, Laredo, fine. If it's going into Capital, we'll go there. I don't argue with it. All right, the next question and comment is Brian says, to follow up, I've listened to the Market Wizards, and that's awesome. Yeah. And Trading in the Zone, okay, by Mark Douglas, another good book. I have that one also. But yeah, the interview with Dr. Van Tharp to me was a 10. And Mark Douglas's book, Trading in the Zone, good book. I'm going to say this again. Brian pointed this out, and it is a good book. Trading in the Zone by Mark Douglas is a good book, and I have it here on my shelf. So it's not a question he has, but more of a comment. So I'll say it again. Brian pointed out, Market Wizards in the interview with Dr. Van Tharp is great, but also Trading in the Zone by Mark Douglas is a good book, and he's exactly right. So I wanted to share that. Billy has a question or a comment. I know the rules, but still hard to take emotion out of buying and selling. This is great. I read Market Wizards. I think I need a psychiatrist. I love it. Yeah. Hey, I'll tell you something, Billy, and everybody. This is tough stuff. This is tough. Anybody who says, oh, this is easy, they're kidding themselves. This is hard. But the one thing we can do, and this is important, is we can have some rules and systems and discipline, and we know what to do, and we stick with it. By so doing, we know through time we will make money, but with one important stipulation. We always limit losses. If we can do that, we're in the driver's seat. We never argue with price. And selling some into strength really helps us. Helps us make money. It relieves stress because we know we're going to make money, which leads to better decision making. And that's what we want. So anyway, it's like the quote. I love this quote. Only the still pool reflects the stars. I like that. So we focus on clean and simple. And as we know, we always limit losses. And yeah, Market Wizards, what a great book, Billy. I'm with you. Okay. Frank has a point here. Fear of losing is greater than joy of winning. I guess it would be initial stop losses. Yeah, you know what? Here's what I found. It's actually good. I think it's good to have tremendous fear of losing, a tremendous respect for it, Frank. I really do. Hey, we don't want to get stuck. It does something very debilitating. It messes us up financially, but you know what else it does? It messes us up psychologically. It gets in our head, which leads to a point. I think this is really important. I read this years ago, and I don't know if this was in Reminiscences of a Stock Operator, but it goes something like this. Two investors or traders are sitting there talking, and one says to the other one, gosh, I'm having trouble sleeping thinking about my stocks, the stuff I own. And the other one says, sell down to your sleeping point. And I think that is a very, very good foundation. If you're losing sleep over your stocks, you've got too much out there. Don't do that to yourself, okay? It's very, very important. And a reason why is when we're confused, we don't think as clearly. When we're stressed, we don't think as clearly. So by default, if we can minimize those variables, you know what we're going to do? We're going to make better decisions. So there we go. All righty, here's the next question. Brian asked this question. What is your biggest hurdle or obstacle in relation to buying stocks? I think it is psychological and knowing your rules. I'm my own worst enemy. This is brutally honest. And you know what? It's the truth. Just laying it out there. What is my biggest obstacle or biggest hurdle in relation to buying stocks? Sometimes having the patience to wait. God, the market's moving around. There's got to be something to do. There's got to be something to do. I got to find something here. Look at this. Oh, it's going. It's like, no. You know the characteristics and traits of stocks that can make good, safe, consistent moves. Wait for those. Have the patience. Have the patience, because after a while, here's what I found. This computer that you're looking at can quickly turn into a slot machine, a video slot machine. I got to do this. I got to do this. And the answer is no, we don't. Waiting for that layup, exhibiting the patience for the slam dunk. And then when we get them, go. And when the market's good, go and go big. There's where the big money is. That's what we're after. So that's my biggest hurdle, is the patience and waiting. I used to have to fight it far more than I do now, but overall, it's working good. It's working good here. So, Brian, good question, and it's taken a hard look. So let's continue onwards here. This is from Ram Gee. The biggest obstacle for me is losing money. I hate losses! ! Right on. Need to understand the sell signals clearly. Okay, here we go. Let's look at some right here. Let's look at some of the IBD write-up stocks. Okay, lift it off. No, there's nothing there. Okay, we know about Caterpillar. Now, this is probably not the best place to look. In fact, I'll tell you what we're going to do. We're going to pause this and we're going to pull up some charts. Hold on a minute. Okay, here we go. We're going to look at some past charts here. Ram pointing out, buying at the right price, okay? How to do this. You missed the initial entry, okay? I hate losses. That's exactly right. Here's a foundation. A clean and simple entry on the chart will give you a clean and simple exit. And we're going to look at some past winners. And I'm not doing this to toot the horn, okay? Nothing like this. We're just going to drag these into the window. Look at that. Clean and simple base. Surge right here. Lifting. I'm just grabbing these randomly, okay? Cyber. Clean and simple base. Entry right there. Off to the races. Datadog. Entry right there. Volume surge. Off to the races. Vive. Entry right there. Volume surge. Nice steady grind. Micron. Entry right there. Clean and simple. Marches up. Anyway, that's what we're after. Getting back to Ram. The biggest obstacle is losing money. I'm with you. I hate it. So the sell signals. Best ones are this. And I just showed you those charts. It's good above the line and it's bad below. That keeps our losses very, very small. I'm not after 7 to 8% losses. By keeping them small, it really helps us. It's good psychologically and it's good financially. It's good above the white line and it's bad below. That's simple. It works like a champ. So anyway, that is what we're after. If I miss an initial entry, next point that Ram brings up. If I miss an initial entry, how to strategize the entry at the second entry point, and what would be the size? All right, great question. You missed the entry. What do? Here's what you do, and it's really pretty simple. You miss the entry, don't buy it. Just don't chase it. You can say, what? No, don't chase that entry. It won't work. Now, let's suppose it's a long base breakout and you really want to be involved with it. What can you do? And I'll share this with you, and this is very important, and it's the real world. You miss the base entry on a daily and weekly setup. I'm not talking hourly here, by the way, okay? We don't do that. You miss the the base entry. What do? You can wait and watch on 30-minute charts or hourly and look to see if there is a clean entry pattern that forms on the 30-minute chart that will allow you to get in. And now here's the real world. The real world says this also. If that happens, what's going to be your stop? If it's a clean, shorter chart formation, if it breaks above those, if it falls below, what do? And it's simple. You sell, which does something wonderful. You keep your losses much smaller. The patterns work great on daily. They work great on weekly. They work great on hourly. They work great on 30-minute. So anyway, I hope that helps you, Ram. Good question. All right, here's the next question. And this is from Lawrence. Lawrence asked, and this could be good for everybody, applicable for many people. Maybe not a direct answer, but how to buy if an account is under the PDT, pattern day trader, okay? Rules that you cannot sell the same day. Well, here's what you can do to increase your odds that you don't have to sell the same day. If you are going to buy, only focus on longer base breakouts. They have the greatest odds of working. They have the greatest odds, I'll flip that coin, of not failing. By so doing, you will increase the potential that you don't have to sell that day. That works great. And I'm going to take it a step further. This is important. I want a base breakout on the daily, but it also must have a volume surge, a corresponding volume surge on the hourly and on the 30-minute chart. Clean and simple entry on the daily, and when it's pushing through the pivot on the daily, go to the 30-minute and or hourly and look for that volume surge. If you don't see volume surge on lesser time frames, Lawrence, don't buy it. Nobody, don't buy it. That way, it dramatically increases the odds that you won't have to sell it the same day. So that gets you around the PDT also. Anyway, I hope that helps you. That's a great question, Lawrence. It's a tough deal. The rule really upsets me, to be quite honest. I will tell you that. I don't like it. But that's just from a guy who's been doing this a long time. From Evelyn, understanding sell signals. I'm reading the question. Understanding sell signals when the stock is running a loss. Trying to balance risk management and not losing my position. And again, this is from Evelyn. And this is a great question. I'll say it again. Understanding sell signals when stock is running a loss. This is what I have found, and I know I say this a lot, but I can't stress it enough. It's good. Price is good above the line, and I'll draw it here. Oops, that wasn't good, was it? My apologies. And Evelyn, I know you know this. Clean line. It's good above the line, and it's bad below. We will see time and again that makes all the difference in the world. And the other point that's very crucial, when it's pushing through that line on the daily, look for volume surge. And you can see, and this relates to the previous question, look for that volume surge on the daily, but narrow it down and look for that volume surge on the hourly and or 30-minute. You get that, you probably have the potential of a winner. I love that. So let's go in here. Trying to balance risk management and not losing my position. I'll reiterate, if we focus only on clean and simple base breakouts on the daily, weekly, hourly with volume surges, the potential of having to have a loss, taking a loss, will diminish dramatically. It really works. It helps us. It helps us. The other point is this. I'll say it again. I hate losses, but we keep them very, very small. and that will help us. So here's the next question, and this is from Ernesto. Ernesto asks, lack of experience to define when to cut losses short. Learning this will be my first step on the way to let the stock run. So, lack of experience to define when to cut losses short. This is a great question, folks. I mean, this is the real world. This isn't textbook hocus pocus stuff. It's like, what do we do? And this will help you. And I know you know what I'm going to say, but it's the truth. And again, you're listening to a guy who was here for 1987 crash and saw the carnage. And this is something I saw firsthand. It can destroy a person emotionally and financially to the point where you never really recover in either respect. It just scars you, okay? So, and I'm not saying that to upset you. I'm just being honest. I want to help. I mean, this is really important. So what do? And this is what's very important. We focus on stocks that have really clean and simple base entries, like right here, Caterpillar. What's Caterpillar? And you've seen it now, team. It's good above the white line and it's bad below. If this sucker falls below this white line, and I'll make it bigger for us, okay? Here we go. We'll just do it. Oh, no, that ain't going to work. Hold on, my apologies. Let's get rid of both of them. One of the things I've noticed, there we go. It's good above this line and it's bad below. What does that do for us? It keeps our losses very small through looking at hundreds of, maybe thousands, no, definitely thousands of charts. We have seen, and you know this, you could teach this, the best breakouts just go. They just push away. That's the key. Find those, focus on those, and that's how money is made with low stress. And here's the beautiful part, as I said before. If it falls back below the white line right here, what do? We sell. 7, 8% losses? No, we don't need to do that. We can keep them much smaller. It lifts through here. Let it work. See where it goes. I mean, this was a newer issue break. Let it work. See where it goes. Now you can say, but Pat, we sold a little bit off into strength. Yes. Why? Because it guarantees a profit if there's any stalling action, but more importantly, if it falls back to our price, we can sell the rest for break even, but we still made money on those first shares. So regardless of what happens, we make money. And now that you've been doing this a while, I think you all can honestly say this. The best breakout stocks, they push away and they don't come back and test you. They just kind of march. There you go. You're putting the pieces of the puzzle together. So good above the line, bad below. We keep losses very small. All right, here's the next question from Andre. Initial stop loss and initial management right after I buy the stock. Folks, this is a great question too. This is the real world. I can't make this stuff up. This is where we get better. Initial stop loss and initial management right after I buy the stock. Who here experiences a little bit of anxiety right after you buy the stock? I do. You're going, really? Yeah. Why? Because it's close to my price. We can rest easier. I can rest easier. I'm going to be honest with you here. I can rest easier when the price is pushed away from me. I don't like it when it's right near it. And I don't micromanage it, and I'm not going to look at 5 and 10-minute charts. But as I've stated numerous times, I'm buying right here, pushing above that white line. And if it falls down below that white line and volume's coming in and the market's sloppy, I'll be selling some of my shares, if not all of them. That's simple. There were people that bought this when we did, MasterCard, and it's up here and they don't own it. They're out. And what if the thing keeps on moving? They're out and we're in. Don't limit profits. We limit losses, and it helps us. So, anyway, getting back to Andre's point and question, it's good above this line and it's bad below. Let it work and see what happens. But I also stress, we sold 25% off. Why? To lock in some profits no matter what happens. See that right there? No matter what happens, we're going to make money on this. We can sleep. I'm making this on Sunday. I'll sleep good tonight. I'm not worried. All right? Now, if it was right below my price or at my price, I'd be a little concerned. But we're okay. And that's not being sloppy, and that's not being complacent. It's utilizing the rules and tactics that help us make money, control risk. Anyway, good question. All right, and here's the next question. And this is from Erin. Erin points out, not letting my winners run. Erin, this is a great question. This is the real world. How do you do it? And I will say it. I'm going to be honest with all of you. Not limiting a loss is frustrating to me. It ticks me off. But even worse, selling and seeing the stock keep going up, that's almost more frustrating to me. I'll be honest. I'm like, it's hard enough to make money. I just sabotaged myself. What am I doing? Has that ever happened to anybody? Have you ever bought a stock and you sell it and the thing keeps on going and you can't find a place to get back in? It'll drive you berserk. So what do? And it's really simple. We sell some into strength. It's maddening to sell a stock. Oh, I made profit. And the thing keeps on going and you can't find a way to get in. Hate is a strong word. I hate that. So what do? This is something I came up with, and it really helps me. I will sell 20 or 25% when I have a decent profit. Not 25 cents or 50 cents. No. Let it work. But any sign of pausing, I will sell some. And it does something wonderful. It guarantees a profit. I know that the other shares that I have left, they can come back to my price and I can sell those, and I still made money. By so doing, I can rest easier, knowing I'm going to make money, which allows me to not get sloppy, but let the other shares trend for me. Let them work. Let them trend as long as humanly possible. And what do I look for? Well, let's look for some examples right here. I'm going to click on some charts real quick. Here we go. I'm going to slide this into the window. This is a past keyless stock. Right here, buy. Look at the trend on the 8-day. Even here, it falls down and bounces off the rising 21 EMA. But look at that trend, and we just stay with it. And then up here, we're selling some into strength. I mean, when it starts to do this, see this nice steady trend? That's great. But then notice the slope of this. This slope is not sustainable. So what do? We're selling some up here. Starts to lose it. We sell more, losing right here. Falling down through the 8 and the 21 EMA, and then it gaps down, and the rest is sold. And you got to say, oh man, that's not so good. We owned it down here. We'll say we owned it at 147. We're selling the rest near 170. What's wrong with that? With low stress. So the point is this. Let it run. Let it work so we don't sabotage ourselves. Roku. I'm going to show you another one. And this isn't bragging, please, Erin. No, that's ridiculous. Just looking at this. Look the break. Look at the break. And then look at how it walks up the 8 EMA, then here, and it loses the 21. Could we sell some? Sure. Did we? Sure. But notice this. Where did it find support? On the 50-day. Comes back down right here, support on the 50-day. We don't have to panic because we sold some and we own it down lower and the trend helped us make money. It starts to lift off, gets loose, reversal bar up near tops, sell some, falls, goes sideways, loses the 21-day, sell the rest. And we did. Gone. And it's just a simple trend. We let it work. We don't know where it's going to stop, but we don't have to know. We'll let price tell us what to do. And here's another great trick, and you'll think this is crazy. I'll tell you something else I do, and I'm not kidding. This is the honest to goodness truth. I'll take the stock if I have a good gain. I'll take it off my front page. I don't even look at it. I'll put it on my second page. Now, I'll have a price alert set, but I don't look at it. Let it go. Let it go and see what happens. That is a great real-world tactic without being sloppy, and it works like a champ. Anyway, I wanted to share that with you, Erin. Great question, and I hope that helps you. And let's go to the next one here. All right, here we go. Here's the next question from Josh Friedman. Pulling the trigger on buys. Sometimes I'm watching a stock go through the pivot on decent volume, but you aren't buying. Should I be buying? Yes. Yes. If it's a clean and simple base breakout on the daily chart, and here's some constraints, and this is important. The market's acting okay, and the stock is pushing through the pivot with a volume surge on the hourly and or 30-minute chart. If it has that going for it, that's a buy. That's a buy. And you can even do this. I am completely devoted to the VIPs. It's the only room I have open. That's the truth. I'm not surfing all over the place. I don't have time for it. I'm too busy watching the stocks and answering questions, which I love doing, and giving alerts. Anytime, Josh, you got a question, feel free to ask. And it doesn't need to be a long, eloquent question. You could sit there and say, should I buy MasterCard? Buy MasterCard? And I'll respond. You're up there, I'm watching the VIP questions. It's all I'm watching. And I'll respond right away. Yes or no. Boom, done. And that'll help too. But through time, using the key list, which to me is the best shopping list I've ever seen, and that sounds arrogant, but it's the honest to God truth, and I don't look at anything else, you'll see, hey, it's pushing, I'm buying. It is a great shopping list. But I need to clarify, I want to see volume on the daily, but right when it's breaking out, I'll take it down to the 30-minute and or hourly chart. Look for a volume surge. That's a buy. And always, always clean and simple base breakouts. That will dramatically increase your odds of making money. So Mike has a good question. How to be more selective and not overtrade? Folks, this is a great question. I'll say it again. How to be more selective and not overtrade? One of the best things you can do is this. And I know you're listening to this video and you're going, oh gosh, here he goes again. I'm wired really tight. All right. I'll just tell you that. And it's part of my background with the outdoor survival stuff at elevations and other things that I've done. Okay. So what is the best tactics to do? And it's this. Focus on stocks in leading groups that have great earnings and are great sales. And they have a really clean and simple chart formation that a fifth grader could see and say, oh, it's good above that line. It's probably good to buy it. If they're buying it, Dad or Mom, yeah, that's where you could buy some. There you go. Done. That's simple. No volume means they're not voting. We don't buy. If you do that, you will not overtrade. You will be more selective. If somebody came up to me and said, you can only buy stocks with a certain type of constraints, what would they be? And I'm going to lay it out for you. And this is from decades of doing this and living off of it. It's this. I will buy stocks in the top 20 or 30 groups that are within 20% of 52-week highs, that are over $15 or $20 a share, that trade more than 200,000 shares a day, that have an accumulation distribution of A or B, that last quarter's earnings were up 40% or higher, or average sales for 2 quarters was 40% or higher, and they have a composite rating of 90 or higher in a good market. And when they push through, there's volume coming in. If it's not there, I won't buy. That really helps. I can't stress that enough. I'm bearing my soul when I say that. Why was I so selective? Why am I so selective? I had to be. I had to. With 4 kids, I had to make things happen. And I have no wealthy relatives. My dad, I was 29 when my dad died. So no big money there, And by the way, that's fine. Hey, I love that man. I miss him. Anyway, that's what I'm looking for. And that's what I'm trying to instill so that you don't have to reinvent the wheel and go through the turmoil that I went through. And, I'm going to give credit where credit's due. I will tell you this right now. How to Make Money in Stocks by Bill O'Neill changed my life. I will tell you that right up front. Changed my life. If you haven't read the book, I encourage you to read it. I have all the editions of that book, and I bet you I've read that book with all the editions 20 times. Mine are marked up like textbooks with notes in the margins, highlighted, dog-eared. Lean on them. Anyway, that's what I found works the best. And great earnings and our great sales in leading groups with a great chart pattern and volume surges in a good market. That'll do it. All right, this is a good question. This is from Denise. Denise, my confidence and belief in what I see. I see a lot of good stocks slip through my fingers. Denise, that's awesome. That's being brutally honest. I'm going to say this again. My confidence and belief in what I see. I let a lot of good stocks slip through my fingers. I love that honesty. In fact, team, I love all of your honesty and humility. I admire it. I say this a lot, and it's the honest to God truth. Your best friend, our worst enemy, greets you in the morning, and we can choose who it is. Greets you in the morning in the mirror, and we can choose who it is. Now, I know I'm getting a little deeper there, but that's kind of my psychological background anyway, and maybe it's because I'm crazy. Anyway, so here's the best thing we can do. Study past winners, and I'm posting past winners all the time. Look at the charts. We know the fundamentals. We know the technical traits, and we know what to look for. So let's do this. Let's run through some right now. Here we go. I'm just going to drag a bunch of these into the ones. All these past key list winners. And this is not bragging. It's training our eyes on the chart. Look at that. Simple. And it lifts. Here's another one. Datadog. Simple base. And it lifts. Another one. I'm just grabbing these. I've got an entire index of these. THC. Look at that. That's sweet potato pie. Simple. Going through here. And it lifts. Another one. GSX. Nice long base. Look at that volume. Simple. And it lifts. That's a double, by the way. A double in 4 weeks. How about that? Another one. FUTU. How about this? This was one. Remember this one, folks? This was right here. Look at that. That's beautiful. That went this year. That's great money. Okay? That is a quadruple. The point is this. It's not bragging. Look at the numbers. Simple. A sixth grader, a fifth grader, a second grader could draw this with a crayon and say, I guess it'd be good to go above this line. There you go. Focus on those. But now I have to take it a step further. Let's quantify this. This is really important. Denise is asking a great question here. Focus on stocks that have either great earnings and or great sales, that are in great groups, that have a clean and simple base, as I've stated before, and look for volume surge through the pivot. Why? It tells us that other people see what we see and they're acting on it. How are they acting on it, folks? They're buying. They're voting with us. And that's what we're after. Volume surges. You look at the daily, but then narrow it down to the hourly or 30-minute and look for that volume. And you'll see it and you'll say, I know this. These are the traits of stocks that can make big moves. Maybe it won't work, but you know what? I'm buying it. Now, here's the other thing we can do. And again, this is like training and coaching ourselves. What we can do is start small. You can say, Pat, I want to own a lot. We have to walk before we run. How can we do that? Start with less shares. Get proficient. Team, I'm going to be brutally blunt. If we're not profitable, with 100 shares, what makes us think we're going to be profitable with 500 or 1,000? Don't do that. Start small. Hit your stride. And then through time, start building up that share size. It works. Honest to goodness, it works. But high numbers of shares equal high emotions. And high emotions is not conducive to good investing. So we put all these variables together in ways to help us find a strategy tactic that we can live with, that we're comfortable with. And when we're comfortable with something, we have the ability to make clear decisions. So anyway, I just wanted to share that with you. Great question, Denise. I thank you so much. Team, I thank all of you for your questions. I think that's the last one. Hold on a second. Bear with me. I want to make sure. Yeah, that's it. So we've got quite a bit in these videos, but your questions are answered. And you know what we're going to do? We'll continue doing this. All right? You think of questions? Let's do it. And maybe we can even do a webinar on it. Just run through it. So thank you all for your input. Thank you for being a VIP. I appreciate your questions. I appreciate your drive, your ambition, your passion for going for this. And I'll tell you this, I'll do anything and everything I can to help. And that's a promise. Thank you very much.